Hey everyone, this is Tyler from the Healthy Coverage Council. Today I'm going to come to you guys today and speak about a different type of video. I know obviously, me, Zach, and then John, we all work in the health insurance industry. Our job is we want to be able to help you guys with anything that is in regards to health insurance, but I think a bigger thing is we're trying to expand into anything that's starting to be health based, whether it be a healthy lifestyle. What can you do to better your overall health, medically, financially, and just your overall mentality? So one thing that I want to come to you today is actually talking about stocks, especially because it's a very, very important year for it. Obviously, everyone knows, due to COVID during February, March, everything crashed pretty much on March 18th. Now, it's tough because that was a very tough time because I know me financially, I was like, oh no, it's just going to keep going down. It's just keep going down. I'm just not going to invest. And then I just kept putting it off and I just wasn't investing for like the very longest time. And then recently just started getting back into it, in August, and realized how much true money I could have made from stocks and why it's so important to, especially because I was just like, I had all the money in this account, in my bank account, in my savings. I was just like, technically it's losing money due to money being printed, and this brings the value of the dollar down. So basically I was like, I'm losing my money, it's going down. I wanted to make money, so what can I do with it? So, and obviously I missed the March time, so because I didn't get into stocks and stuff until August. However, obviously, if you don't want to invest in like single-handed companies because they're a lot more volatile, you don't really know where they could go as far as their business, they could go bankrupt at any time, then that's fine. If you want to be more of the safe route, I would highly probably recommend ETFs. Now, obviously, this is just, I'm not a financial advisor. Do your own due diligence, research these companies yourself. You can go on Google, you can even go to YouTubers and see what they might have to say, or go to your own finance person and see if it is a good decision. But however, the two stocks I actually want to come and talk to you today are actually ETF funds. Basically, they just go up over time. They're typically certain companies within a certain sector that the ETF decides to go in. So there's one called TQQ. This one has been performing insanely well over its lifetime. I believe I'm actually looking at it right here. From 2010 and February 12th, it started at $1.74, which is insane. It's insanely low. No one would expect to want to invest into something that's so low, because it's like, well, what if it just goes south? It's like, well, it's an ETF, so it typically, uses the best companies to leverage itself. So basically, from that date to now, when we hit our highest peak back in August 28th, before unfortunately everything had a little crash in September, that one ETF went up 8,963%. That's absurd. Most stocks aren't like that, so it's very, very tough. It's because it's more like, you gotta play the predicting, am I gonna be able to get this or will I not? So, but to put that into perspective, I mean, you could have even put just about one of those and you literally would have made over $8,000. So imagine if you actually decided to put actual money into it, like a 20K. And I'll kind of go over an example with another ETF that I think it's a very good decision right now, just because of the way that everyone is looking towards being more green. And this is actually a stock called TANstock, Invesco Solar ETF. It has to do with solar energy, which, with everything that's going on with EV cars and electric and, going away from fossil fuels and oil prices are going down. This is actually one of the lowest years it's ever been for oil and for fossil fuels. So the TAN ETF, overall it's max. It used to be a very, very important thing, and then it went down over time. But as this year of 2020 has been going on, and even the past couple of years, people are starting to finally realize this is something that we need to get back into. So even this year alone, this stock was around from October 14th, so literally a year from this day, it started around $29.80. Now, when you go fast forward it to today, where it's at all-time highs, it's at 153% increase, which is insane. And then, but if you were someone who was very smart and you waited for that March crash after everything happened with COVID and you invested then to now, you're up 240%, which is absolutely absurd. Now, I did the math and everything. If you were to invest from today to, so on and so forth, and if it continued at its same rate, what would you be expecting if you put an investment in? So let's just say you were someone and were actually to put in, $20,000 into this stock currently at its moment. On average, this stock from October to current, at its current increase, if you put in 20K, on average, you are seeing about a $1,918 return every single month, $480 every week, and $96 every day, which ultimately ends up to about $23,000 every year of an increase if you put in $20,000, nearly doubling your money every single year, even a little bit more than that. So what's that say? ETFs generally, it doesn't matter what you look at. You can look at the S&P 500, which is that's where a lot of people base off their stocks, is the S&P 500, Dow, and NASDAQ. Because the S&P 500 is the 500, some of the 500 biggest companies out there. So why wouldn't people want to invest in those? But ETFs generally go up over time. And the thing about stocks is a lot of people want to be scared and they don't want to put their money because they don't know where it could be. It's like gambling. However, it doesn't. If you look at the entire years that stocks have been around since the beginning of time, they've always technically gone up. Yes, there could be a bump in the road where it crashes at some point, depending on presidencies, what's going on with the economy and everything. But it still bounces back and ends up being an all-time high. Granted, even for this year, everyone freaked out, it crashed, and now we're doubling, tripling our numbers. So, but who knows? It could crash after the election. We don't know, but I guarantee you, even then, it will probably bounce back and get to an all-time high, even if it's 5 years from now. Regardless, it still would hit an all-time high, even if it's 5 years from now. So, I would say if you guys were to invest in anything, generally go to ETFs and maybe even dividend ETFs, because with the dividends, you might actually be able to get a percentage back off whatever percentage the ETF wants to give, whether it be like 4% or 7% of whatever the stock price is, and then you get that on a monthly basis. That way, obviously, if the stock were to crash, you can use the dividends to kind of maybe buy back in at lower prices. That would basically be like almost like free money. So I would highly recommend getting those. So, and then if you guys have any questions, I'm trying to be more influential into this stuff as well. I like it a lot. If you guys have any questions for me or any guidance for me as an investor, I would love to hear some. I find this stuff very, very interesting. But yes, so that wraps up this video and what we can go as far as going forward. And I'll try to post a little bit more of these. Like I said, I enjoy these a lot, what's going on in the stock market and what we can do as far as getting our lives in a more healthy position. Well, have a good one, guys, and make sure come to Healthy Coverage Council. And if you guys have any questions for me, Zach does a lot of, he knows a lot about real estate. So if you have any questions to him, message him about real estate. He's very, very informative. And then John's there as well. He'll help you out with mainly the health insurance side and maybe stuff like on LinkedIn. He's very good with that stuff and making connections and driving a business farther and getting connections with a lot of other people. So have a good one, guys. And if you need any things, let us know. Bye.